Welcome to Drill Down Earnings. We have quarterly results out from Adobe. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology, and Adobe is certainly one of them, one of the largest software companies in the world in San Jose, California, down here in Silicon Valley, of course. Second quarter fiscal year 2025, better than Wall Street expected. Wall Street wanted $5.2 billion and $4.97 per share. It got $5.9 billion in revenues and $5.06 a share. But that's just the miss or the beat. We don't care about that stuff. We care about the business. When we look a little bit deeper, we see number one, a top line, of course, 11% revenue growth. It's a record for this company ever, and a record in a second quarter. But maybe really interestingly, they've been looking at 11% growth, 10 or 11% growth for 2 or 3 years straight. Really strong and steady business here. But when you look beyond that, a little beyond those headline numbers. So strong cash flow, and they're buying back shares. We'll get to that. And the company raising guidance, full year guidance now increased to $23.550 billion in revenues for the year, raising EPS guidance as well. This business is really profitable. Fantastic operating margins, 37% operating margins. If you look at the long-term chart, you see a hit they took because of a write-off from a merger that didn't get done. But other than that, you've seen really strong margins from this company, above 34%, but 37%, just really strong for Adobe. Now, they've got 3 businesses: digital media, digital experience, and publishing. So digital media is the big business. That's 74% of revenues in this quarter. That's Creative Cloud and Document Cloud. Those are the products that a lot of us use, like Adobe Acrobat and Adobe Illustrator and Adobe Photoshop, that kind of stuff, and their Document Cloud as well. Acrobat, of course, a big part of that, and the managing of that stuff. Their audio experience business, the Adobe Experience Cloud, or what we call digital experience, that targets marketers and digital agencies. That's 25% of revenue. It's really interesting business, that data-driven business. And finally, their tiny publishing business, 1% of revenues. So what we saw is that publishing, while it's still shrinking, is getting less worse. We'll call it that. Digital media growing, the biggest business, growing really well. And digital experience is tailing off. Let's look a little bit more individually. So digital media, the segment did $4.35 billion in revenues, up 11%, with ARR, that is annualized recurring revenue, of $18 billion. Digital experience, that business, the growth is slowing down. It's something to keep an eye on here. I think it's one of the reasons you saw people initially look at the raised guidance, the stock went up, then it leveled out. We'll show you that chart in a second here. But the digital experience business still growing at 5%. Nice big business of $1.46 billion in revenues in the quarter, but maybe not growing as fast as they would like. And finally, the publishing and advertising business, down 5% on a year-over-year basis, but that's not as bad as it has been. So maybe improving, the losses narrowing, I don't know, the reductions narrowing. And one other thing I want to mention, I mentioned the buyback. So this company's been buying back shares steadily. They brought the share count down from 470 million to about 430 million. And the result is that the share count's down 2% even in the last quarter, but the result of earnings per share were 9% larger than they would have been had they not started buying back shares 3 years ago. So how did the stock react? As I mentioned, the stock shot straight up. Then when people looked a little bit more of the numbers, the stock sold off a little bit, kind of leveling out flat. And for the year, not doing well. Adobe down 10%. Now, in the press release, in the conference call, a lot of talk about AI. This company made really big investments early on in artificial intelligence, really embedding it in all of their products. And the results were kind of bumpy, but you can see it. I use the products all the time. So I know that you can see the AI possibilities with Illustrator, with Photoshop, and even Acrobat, and things getting a little more intuitive here. Shantanu Narayen, the CEO, talked about their investment in AI as a key growth enabler for this business. Here's what he had to say.
I do believe the fact that Firefly has been designed to be, preserve intellectual attributes of people, that is going to become an increasingly important thing in the enterprise. Everybody's experimenting with it. As it becomes mainstream, that's going to be. So yes, I'm more bullish about it. And what I'm really pleased about is underlying 2025, how we've re-architected the business to be this AI-driven growth.
So that's Shantanu Narayen, but what's our big earnings takeaway? What's the one number that you want to remember, and that will tell you a whole lot, the drill down earnings bite? Well, I've got that. So here's our summary. Q2 Fiscal Year 2025 earnings, your essential summary tells you this company beat estimates, whatever that means, an 11% increase in revenues to a record quarter, an all-time quarter for this company. But the bite, the one number that tells you a whole lot about Adobe, is that their digital media business, which is 74% of revenues, is growing at a 12% clip. It's the fastest growing business they have, the biggest business they have. It's got to be good, even if the market doesn't love it right now. Good for Adobe. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.